Good morning to all traders and welcome to another Market Insights video provided to you by Orbex. My name is Stavros and today we are going to analyze euro-dollar, dollar-yen and also cable as Fed is expected to set the ground for either fresh lows or fresh highs. Markets traded volatile in both Monday and Tuesday, but yesterday most majors ended the session unchanged as all eyes turned to FOMC's decision on interest rates. In fact, Fed is expected to remain pat, but market participants are expecting to receive clues on forward guidance. Are we going to see two hikes in 2019 or not? Are we going to see a balance sheet reduction? And if yes, by when and by how much? That's what I would expect to hear for directional bias. Note that losses can exceed profits and none of the recommendations here constitute investment advice. Let's have a quick look on the calendar today. We expect some data from Germany and also the UK's CPI inflation figures. Later, we have crude oil inventories, which we analyzed yesterday's video. And of course, the Fed's interest rate decision later in the night, just before midnight close as well, we'll have the GDP data from New Zealand. Now let's jump to our charts and check. Start with the euro-dollar. We talked about euro-dollar last time. We were expecting prices to start moving lower, a little bit lower at this level, which is the extension, the golden extension around 113.60. We are seeing some sort of, not significant pressures, I would say, but some sort of bias over here. But we are not seeing any moves on the moving averages, so they are pretty flat, which indicates that we might see another move to the upside where we will be able to complete a better, some sort of an impulse wave near 114 psychological level. From here, of course, we'll set prices to, lower, to break lower. First, of course, will be this trend line after this one, and see any sort of further moves to the downside to complete a correction. Now, let's go down on the 1 hour chart quickly to see what we have there. Yes, pretty much on a shorter time frame, I'm still expecting prices to move a little bit higher. That, of course, depends on Fed's decision today. We don't see any support from either the RSI or the MACD. We are seeing a very strong support level, which has broken, was retested, and prices have remained above it for a few sessions, I would say. And in case prices move lower, the first hurdle that we would expect prices to break if euro-dollar is going to go lower is the 113 hurdle. Okay, so these two barriers, 114 to 113, are very critical for further directional bias clues, in my opinion. The Bollinger Bands are very flat. We're expecting the markets to remain a little bit flattish ahead of FOMC, but I wouldn't be surprised if we see a break. Now, in dollar-yen, similar pattern. We could be expecting prices to move higher. This is where we can complete wave 5 of an intermediate wave, this one over here. And we are going to be near 113 psychological level as well. Now, at the moment, we are trading within a ABCDE open triangle pattern, and from here is where we could expect prices to move a little bit higher. 112.17 first level, and then we're looking at pretty much 114. Now, we have some supporting moves, some supportive data indications from the RSI and the MACD, and we could expect indeed prices to move a little bit higher. That, of course, would be supported by Fed's decision. If not, the whole scenario changes. Let's go down at the 1 hour to see this chart a little bit closer. So we received a bearish signal here, which is good. We had this correction, and from down there we have first wave, second wave, third wave. We could see some rejection over here at 112 because it's a psychological level, as well as would be the end of this impulse wave. We could see a correction down to that level, and from here go all the way up to 113 and even higher. I want to talk about the pound a little bit as well. There's not much that happened since yesterday. We are still moving within this triangle pattern. We identified, I think it was on Monday or Tuesday, or even maybe next week, last week. I'm seeing some supporting moves here for a bullish bias, and in case, of course, prices hold above this level, which seems to be holding quite firmly as we speak. And for the moment, I would expect prices to break above that level and move higher towards 134.50 or even 135, given, of course, that we are able to break above this trend line that is pretty much forming a bullish ascending channel on the longer time frame. So on the pound as well, we are in some sort of ranging market at the moment as we speak, and we have been, I would say, getting tighter and tighter over here, which means a break is expected soon. I'm not sure that's going to happen before the FOMC, to be honest, but nevertheless it's going to happen by the end of this day, one way or another. So this is all for today. I want to remind you that you need to be careful during FOMC. The markets are very volatile, and I would pay attention to those critical levels because they tend to attract both buyers and sellers. So thank you for watching our video. For another day, feel free to subscribe to our channel because that's how you can remain updated about the markets. You can visit our blog because this is where we cover all the latest news. We provide all the necessary tools to serve you responsibly.